All right, morning everyone. Let's get going. Start of the week, fired up. Another week of volatility, hopefully. All right, Friday's session with big recovery. Obviously, as you can see in the U.S. markets across the board, really, firing back up to come kind of back into resistance more or less. There's some resistance up in the S&P. I think around 1963, 1965. We actually kind of pushed through that on spot a little bit to close up there, but I think it's going to prove itself. I think it's going to have to get through for it to really, for us to really call this to be a break, back above. It kind of doesn't seem like it's due to stay above these sort of levels simply because the fact that, we got down to about a 4% correction, I think, from high to low on the S&P. We obviously took an absolute beating here, about 10.5%, if I'm not mistaken, from the tops. Some of the other markets as well. But the States, really, the sell-off has been quite tame for the most part. We had a really good non-farm payroll number again on Friday. The jobless rate fell down to 5.9%. We continue to see data points in the States coming in that are really, really solid. The banks were good on the day in the States. And we've got earnings season coming again, with Alcoa kicking it off as usual on Wednesday this week. So, just when we thought things might start to quiet down a little bit, they're going to kick right back up into earnings season. So that could really trigger things, a wave of a rebound or potential further the sell-off that we have seen as we get into earnings season a little bit later in this week. All right, an Asian session, you can see Nikkei had another really strong session. A little bit of a rebound from the big sell-off that we saw in the last week. We did see the yen that weakened back out again. We're really seeing the dollar once again really strong versus pretty much every cross. I think we hit a low in the euro versus the dollar all the way down to 125. We've done 10% against the euro in like maybe a month and a half, 2.5 months, maybe something along those lines. That's the steepest sell-off for the euro in several years since the European debt crisis a couple years ago, and it's starting to get to that sort of level now, which is, I think, very telling on what's going on in the global landscape right now. But the rest of the European markets were soft. Australia continues to be soft. The miners just getting obliterated again every day. They just you just have to sell these things when they get up, seems to be the play. They just continue to fail over and over and over. This morning, actually, the steepest losses we've seen out of the bulletins in Aussie in a while, and I don't know, potentially could be a little bit of capitulation at the end of this move. But just be careful out there, buying, trying to pick the bottoms on these things. They're still definitely not the way to play it. Obviously, the market's nerves are settled a little bit in Hong Kong, with things starting to look like they're settling down a little bit with the protests. Potentially getting somewhere here, and some sort of into the major protests there, and the minor violence that's kind of happened along with it. So a little bit of nerves being settled on the back of that this morning. All right, chart of interest, chart of the day. We've got what's interesting about the whole setup in the States, and this is one of the things that's making the Fed's job so difficult here, is we've seen GDP per capita continue to rise over the past couple of years, but median income has really hardly risen. We've just seen a tick up in it recently over the last year and a half, but you've actually seen the lines cross, which is really the first time ever that's happened. And I think the reason for that, and this might be just a terrible explanation, is simply that the companies are starting to make more and more of the bulk of profits there, and haven't really been taking wage growth up in line with it. Kind of maybe widening the gap between the rich and the poor, which is one of the reasons why you're starting to see, even in places like the developed markets, you're starting to see more and more of an outcry toward that type of thing. The shareholders and the CEOs and that sort of thing continue to get a bigger and bigger slug of the profits, rather than raising the wages for the blue collar worker. So it's a really interesting chart to have a look at there, and I think that's made the Fed's decision slower than it normally would have been. All right, this morning we got a hell of a lot of stocks going ex-div. We did have a pick and pay trading update, which came out this morning. Headline earnings per share going to be up over 30% to 53 cents. I haven't thrown any expectations out there for the first half of next year. Full year growth expected at 28.8%. So I think relatively strong out of Pick and Pay. Ex-div today, we've got Murray's, we've got Bidvest, we've got Discovery, we've got Cecil, we've got FirstRand, we've got RMH, and we've got RMI. So Cecil and Bidvest obviously being the big ones. Keep an eye on all those stocks today. Don't get caught. An APN return of capital today of 188. So just keep that in mind. That there's a hell of a lot of stocks that are going ex-div on the board. Don't get caught up in one of those in the open thinking you're getting lucky. All right, market data today. We had factory orders out of Germany weak again. We continue to see the same thing, weakness out of the Eurozone, which is obviously impacting Germany greatly. We're going to see PMI numbers out of the entire Eurozone today, starting with Germany at 9:30. We're going to see, and that's it. So that's kind of spread out across the day. Europe as a whole at 10:10, and that's it. So probably not a heavy day, obviously, in markets in terms of data today. We'll probably get some volatility, though, simply just because markets have been volatile, and so we'll probably need some volatility to kind of find the right sort of levels and to see us, figure out where the market actually needs to be. Right, let's get into the maps. All right, the first thing I want to look at this morning is, let's actually start here. Okay, so we showed you before, we were showing you on the weekly closes, and the weekly we already got the breakout on the rand here. We're going to look at the closing basis on the daily, and you can see only just, and I wouldn't even say that it's enough to actually call it a breakout, because it only got through by maybe 1 cent, 2 cents tops. And when you're talking about 11 rand odd, that's it's not that significant. Sorry, I just can't get this line straight, but there we go. All right, so you can see there, only just did we, let me just zoom it forward so you can see there, we just closed above it. Like I said, we're already back below it this morning. This is the rand. I don't, against the dollar, I don't see that that's enough to really call that officially a breakout, because there are quite a lot of wicks here on both sides above. So we're going to need to watch this level very, very closely. It's about 11.32. If we get above 11, if we can actually push through it, we need to see some confirmation that we can get through it and push through it before the rand can totally just blow out here. That level's through 11.32. I would say if we can get a close above that Friday's close, which is I think at 11.33 or 11.34, then I would say that we can officially say that we're through it, and you can probably short the crap out of the rand for a move to about 12. So just watch that one very closely. It's obviously a massive impact on our market wherever the rand's going to go. All right. Next one we're going to have a look at this morning is Aspen, which is really kind of broken out a little bit of a narrowing wedge here, a little triangle formation. And I think we actually broke out on Thursday. Friday, we just kind of put in a little consolidation. Watch it this morning. I'd like to see it get above 340. If we can get above 340, then I think we very quickly can make a move, probably slightly north of 350. Not a huge move coming, but the setup is definitely bullish. All right, Netcare. I should just lump this in with all of these things, but bottom line is Netcare came down to hold a really good important level of support here, right around $31. We kind of closed right on it, or maybe a touch below it on Wednesday. Thursday, we opened up below it and immediately pushed back above it to close above it nicely. And then on Friday, obviously, we got the total reversal here, really taking things above and probably breaking out a little bit from, or getting close to breaking out from a bit of maybe a ugly flag or something. But bottom line is we've had a nice reversal off of real support in Netcare. I think probably going to move back to the upside now, along with some of the others. I'll show them in just a second. Sorry, I probably didn't put these things in the greatest order. ShopRite, didn't show this last week, and I was looking at it myself quite a lot, simply because this level where we bottomed out was at 136 last year. Has obviously, I think it was I would call very steep lows, simply because we bombed down into this level only to make a really hard reversal off of it. So to me, that level is really important. We've come back down, and we haven't come down in such a steep fashion, but we've had a couple little tests intraday. We haven't really gotten a proper move down to that level, but a couple little tests intraday to touch at 136, and it's held. I would look at this thing. I'll shorten it up a little bit here. I would say that this thing we're going to really need a push. I don't know, maybe above this little range of consolidation, maybe to actually get it closed a little bit more above than what it did on Friday. This range of this consolidation, and if we do get that, then I think maybe we can push to the upside here. Also think maybe we can get above that little downtrend. That might be a nice little place to look to play this on the long side. Otherwise, we're going to need to see this thing give us a little bit more proof of support around 36. But I think you actually don't want to see it test too much more at 36, or it could be bearish and lead to a breakdown from there. So just watch ShopRite closely. I think there could be some real action coming there soon in ShopRite. All right, the last two I'm going to show you, like I said, I should have shown this one in line with Netcare a second ago, but this is Life Healthcare, and you can see really holding on to this 44 level, which was a major level before. We came down into this level after really being one of the stronger stocks in the entire board. We made a hard spike off there on Friday. I'd like to maybe see this thing small pullback either today or tomorrow or something like that. Chance to nibble a little bit closer to 44 might be a great little place to get involved. And then the last one I'll show is MediClinic, which is also looking very similar, same sort of thing. All of these stocks looking exceptionally bullish, maybe just a safer place to put money in the market where guys just have no idea where to pump it into at the moment. Kind of breaking up above a bit of a descending triangle or a bit of a flag formation here, and I think above 93 we could probably get a quick move up toward $100 in MediClinic. And that's it for today, guys. Good luck out there.